Welcome to Momentum Monday. Howard, what's your take on Jeff Bezos and taking naked selfies?
Never ends well. That's where it ends. My puppy just gave her a bath. Listen, I'm not going to cast judgmental stones. I mean, it seems like he's in love. Just it's a dangerous time to be on digital. Hey, so let's get right to the markets. You in San Diego?
I'm in San Diego, yes.
Okay, I'm in Phoenix and just got off a 30-mile ride. So let's get right to the markets. Ivan, take it away.
Awesome.
People should just see that page right now, right?
Yes, people should are seeing only my screen. This is the S&P 500.
Let's get caught up.
As expected last week, we saw how the main stock market averages found some minor resistance near their 200-day moving average. Both the S&P 500 and the Nasdaq 100 are finding some issues there, but I don't think there is a reason to go short yet. I think under the surface, we continue to see mostly bullish developments. At least that's what I see. I see the market reacting favorably to earnings reports. We see many companies guiding higher, smaller companies mostly. We see momentum stocks holding really well their gains and setting up near all-time highs. We see how deep buyers are constantly stepping up, and even on Friday, we open near the lows, we close near the highs. That's definitely bullish overall.
Yeah, I mean, just to clarify, I mean, for 99% of investors, it's rarely a good time to be short. So again, like, you can be in cash and you can be in stocks, but people should be invested. I mean, Momentum Monday stands for, being invested. But like we said, I don't know if the 200-day means anything. It means something to me, and that's just because these are long-term averages where we see lots of sellers and buyers converge. But I'm with you. I think stocks, whether we like the macro environment or not, the stocks are acting pretty well, and earnings, at least in the United States, for small and large U.S. companies are working. And who are we to stand in front of the market? So let's this is a big week for earnings, like you said. A couple of our favorite ideas have been in our portfolio forever. Shopify and Twilio kind of closed at more all-time highs. They have earnings this week, so anything can happen. We saw that with PayPal hitting all-time highs and then pulling back. So Shopify and Twilio are at all-time highs, but again, doesn't mean that the earnings are going to be great this week. It just, they're in strong trends in the right sectors.
They can have 20% pullbacks, and their uptrends will still remain intact.
Yeah,
Yeah.
What the most interesting stock to me this last month has been Boeing, which is a Dow stock, BA. I've never owned Boeing, but in December it just looked like all these companies were going to roll over, and you can see in December of this year, it was ugly, and that's kind of a mirror image of what the S&P was doing in the Dow. And here we are 6 weeks later, and the stock's at all-time highs, crossing 100 billion in sales, space wars, supersonic planes being chatted about again. It's hard. I mean, these are the type of companies that are going to take the NASDAQ to 10K, even though Boeing's not in the NASDAQ, is, healthcare, aerospace, and technology. And so, you have to be in position. I think December shook a lot of people out for good reason. we were getting stopped out of a lot of momentum trades, but the market is starting to get us back into positions again. And the ones that we weren't stopped out of have quickly rebounded. Like we said, Shopify, Twilio, Nike. If we look at Nike,
yeah, all the enterprise software stocks are back near all-time highs.
enterprise software stocks, but even like you were saying this weekend, some of the retailing stocks.
Exactly, quite a few of them, yeah.
So which ones are you? So here's Nike. I mean, survived the pullback. It's not a small company. It's not something I'm recommending right here, but it's a stock that I own. Which ones look interesting in setups?
In terms of retailers, well, the usual suspects, I think Nike and Lulu are looking strong. And also, we saw some favorable earnings reactions. We have Estee Lauder, which had an earnings gap, and now it's consolidating through time. And similar setup in Ralph Lauren, which I don't even know how they're still relevant, but their stock is looking very constructively. Look at that high volume gap, and then really tight range consolidation. That if they clear that level here above 126, you can swing trade it up to, I think, even 140 in a good market, and then you can risk $3, and that's a really good risk to reward.
Yeah, so Ivan's talking about swings. I'm talking about bigger trends. These don't interest me from a bigger trend perspective. But I think what Ivan also here with me is showing is that it's not just technology. A lot of stocks held up. December was bad, but a lot of stocks have quickly regained their 200-day moving averages. And then we'll get into some medical. So Ivan, let's get to just, because it's an earnings week and I don't like trading an earnings week. Let's just go to the SL50 list and talk about what we see. So Ivan and I have a very simple service. We've built this product over the years. This is this is where Ivan and I shop. Ivan and I built kind of our own momentum list based on products that we've conglomerated and social sentiment and our own earnings filters, etc. And in good markets, there's 40 to 50 to 60 names. I mean, there's obviously we glean it down to 50 in good markets, Ivan, and in bad markets, this can disappear down to 5 or 10 names.
Yeah, exactly. I mean, in a really good, strong bull market, there could easily be 200 names that are worth owning, but of course, it's always better to be focused on up to 8 to 10 names. Even if you compare the performance of the S&P 500 to the performance of Dow 30, you see that they're very similar. So you don't need to own 500 stocks. I mean, you can have a similar performance or even much better one with 8 to 10 stocks.
In great markets, I end up in 20 to 25 stocks, which is just too many. And in weak markets, I get down to 5, 6 stocks, 7 stocks, depending on what's holding up. But right now, it's a target-rich environment. We have communication equipment, we have biotechnology, we have continued leadership, Ivan, and software and enterprise stocks. Anything stand out this week?
I mean, the same sectors, enterprise software, and this is why it's so important to pay attention to industry relative strengths in a good market, because if you catch just one big trend, one big industry trend a year,
there's Lindsay.
That could be enough for you.
Yeah, and, right now it seems to me that I'm reading a lot of stuff. I mean, I wish I knew a little bit more about medical and healthcare, but it seems to me that behind enterprise software is this healthcare.
There's definitely some very interesting trends in medical equipment, but also those stocks are not for the faint of heart. They could easily have 30, even 40%.
But this is what biotelemetry is more clinical research lab stuff. So I don't know if this is medical services, but
they sell a product that helps doctor to monitor customers with heart issues. So they do have a product. It's not just
we're going to earn a 80. But if we go back to a weekly,
but of course, there are many startups that are coming up in that field, and if companies like biotelemetry don't start using their stocks to purchase those startups, I mean, they'll have some.
Last week I mentioned ARRY, and it broke out. It's a cancer company. So these aren't new ideas, but ARI last week, I was like, that's one that's going to go. And
there are no new ideas, but now you see that in a strong market, breakouts are working. In a weaker market, breakouts are failing.
Especially in the medicals. So array bar, it's, you know, okay, what makes these hard to own for people like me is when there's companies with earnings and catalysts, I understand, but, you know, we try and share ideas. You know, we have a wide audience here. So if you understand this industry around cancer, medical devices, we'll whip through the leaders. So Ivan, so Array, there was that Biomet. Which other ones show up on the list?
I think this one, GKOS.
Okay, so glaucoma disease,
setting up near all-time highs. Let's see what else.
Ionis Pharmaceuticals. That's been on for 11 weeks.
Pull it up. I think they're looking
that's
pretty stable here. Look at that tight range contraction near a 52-week high. I think if there is a breakout here above 60, we can see a quick move.
Money this year. If that comes to pass, that could and that breaks out. That could be interesting. Okay, so that's a tight breakout. It's been on the list for 11 weeks. One that I thought was interesting that was just showing up was this Genomic Health, GHDX.
GHDX. Oh yeah, definitely. Let's see GHDX. Yeah, it has more than doubled in the past 7 months.
Yeah, and the earnings, you know, still, you know, went from negative, not making money, and making money in 2018 is looking to make even more.
And
again, these are trading at 70 times earnings, so it makes it hard for me to do the work on these. But again, if you're comfortable trading trends, these diagnostic and medical stocks and the medical supply component stock seems to be doing well. Okay, let's go back, Ivan, to the list. Yeah. Same old names continue to show up: PayPal, Shopify, Twilio.
Yeah, many of the same names are holding.
And hit all-time high. CyberArk, which was on my list, you know, rallied.
Cybersecurity has been very hot in the past few weeks, just like marijuana stocks. Those two industries have definitely been on fire, and for good reasons.
Anything that I mean, CyberArk is the only one I follow. Which there's, is there any ones that you're following?
In cybersecurity, there was one that I mentioned a few weeks ago. It's WCH, I think. I'm not sure. Let me double check. No, it's not this one. Let's see if it's still on the list.
There's a lot of names that I recognize on this list. This is like a really rich list of companies.
Yeah,
there's a lot of new names. So this market, you can see from the amount of weeks. That's my dog, Market Lindsay. There's a lot of companies with 1 to 2 weeks under their belt. So as the market hits a 200-day moving averages, there are a lot of stocks that you have never heard of, from Inspire, which is another interesting one in the medical equipment space, which is in the sleep apnea space, INSP. These are stocks that, you know, they've only been trading for a year and a half, but this one's doubled and ready to break out again. And beautiful setup.
Yeah, it's right at all-time highs. It's if you were a swing trader, the entry was on Friday when it cleared that level here. And if you're a longer-term trend follower, you can enter now, but then you need to use a much wider stop.
Yeah, these are new spaces. These are, you know, 40% swings within the base. But if this breaks, this is a quick 20 to 30% run potentially. So what interests me is what you said at the beginning, Ivan, about the markets. The markets are up against 200-day moving averages. The media is talking about that, but underneath the surface, as always on our momentum list, there are stocks breaking out to all-time highs. And it's, you know, this last correction, if it did one thing and it didn't knock enterprise stocks off, let's go back to the Nasdaq 100 here, Zendesk as an example. You know, it didn't knock everything. Stocks wobbled, in November and December, but you can see how fast they recouped their gains. And
Look
so
at their growth. They just reported.
and it shook people out. And so this new, if we were to enter another phase of this bull market and stocks started to do more like what Boeing just did and completely went from breaking down to breaking out to all-time highs, it's not fun to have to buy up. But our job is to kind of point these things out to ourselves and really look at the evidence. And the evidence is there's some momentum working. And although enterprise stocks, as I was saying, are leading still, we're seeing, if we go back to SL50 list, we're seeing new ideas. We're seeing, like I said, medical labs. We're seeing with Lulu, we're seeing some semiconductor stocks breakout. We're seeing internet software stocks. We're seeing specialty retailers like Etsy, e-commerce. I mean, it's just a wide range of companies that you probably will not have heard of. And that's what kind of bear markets, and we were kind of in one for 3-4 months, and it was a sharp, and it was quick, but there's no rule to how long bear markets can last, and that was a vicious short for now, correction. So also these communication companies, Ivan, which I don't really like to own, but Audio Codes and Finisar,
yeah, definitely. They've been doing really well. Look at that breakout here, and now it's consolidating near all-time highs again.
Data networking, Finisar, which has kind of been a wild stock, but back on the list.
Yeah, it's also, look at that tight range here.
Yeah. Look back on monthly. I don't think on a monthly that stock's been.
Yeah, on a weekly it doesn't look that hot, but it's still it's setting up for a breakout here, for a potential. That's level here 23. It's really been important historically. So if it's cleared, it has short interest of 5 days. So that it could be a quick short squeeze.
Yeah, pull up Shopify for a second. It's so many. It's no, sorry, not Shopify. I meant Spotify.
Spotify, yeah.
I think they're one of the most interesting, companies because of their direct listing. Technically the stock's in no man's land, so I'm not recommending it right here. Although I do own some. I just have been
second quarter in a row they're reporting positive earnings and they're growing. So
I because of the direct listing, there's always going to be supply in this stock because there's nobody in charge of this stock. Like it just went public without taking money. But classic technical analysis, we're in no man's land here. But I am intrigued that they should have been dead from day one, but they've built a brand and a product that I live on. And I'm really excited about their move into podcasting. I think it's not going to be simple. I think audio but I think audio's hard enough that Netflix, HBO, and all the incumbents in Amazon are not focused on it. So Spotify at some point is going to, I think, see $300-400 a share and be a $7,500 billion company, just because the bigger companies in the subscription business, when I think of Netflix, I just think video content. So I think that's an interesting one to watch over the next year. Okay. And Netflix continues to base.
Yeah, it's holding above the 200-day, showing relative strength. Look, 91, and it's rising. So definitely it's acting quite positively.
Anything else that you're looking at specifically? Otherwise,
there are quite a few setups right now. It's not just one and two, and I already mentioned the one in medical devices. There are also setups in biotech. We mentioned this one. It's setting up for a potential breakout. Setups in there are so many stocks that gapped up on earnings that have consolidated through time that are setting up for a potential breakout. So if the market continues higher, they're likely outperform.
All right. Well, everybody have a great week. Hopefully this helps with some new ideas. And like I said, Ivan, if people were subscribed, let's go back to Market Wisdom, your product here for a sec that I'm working on with you. Ivan, this stuff at Market Wisdom, Ivan, go to the sign up page. Yeah, so Ivan and I have worked on this for a really long time. Ivan runs the day-to-day of this. For if you're an old Peloton subscriber of mine, just give me a call. We got a special discount. But it's a really good way to bring Ivan and our mentorship on a day-to-day basis into your kind of investing. All right, Ivan, have a good week.
You too, Howard. See you next week, guys. All right.